you, I think I know, but I'm Kirk Avery. You'll see Mike Craig. We're partners with Steeple Rock. And we are partnering with Wildhorn Capital. They're specialists really here in Central Texas. You may have seen a little 12-minute video that we made not too long ago that I sent out in the original deal offering. And so you got a little bit of a taste for what Wildhorn is about. So they focus mainly Austin, San Antonio, right here in the Central Texas corridor. This is our third deal to partner with them. Back in 2018, the very first deal we ever did was with Wildhorn. We still have that property. It's the Lila. It's in San Antonio. And then a few years later, we partnered with them on Patton East, which is another asset that's here in Austin, Texas. Both are doing well. And we've always said if we had an opportunity to work again with Wildhorn, we would do it. And sure enough, this opportunity presented itself. So Andrew Campbell, he's one of the principals at Wildhorn. He's unable to make it. So we have Hayden Glastetter. Hayden, wave your hand right there. All right. He's the director of acquisitions. So he is more than qualified to handle any of the questions that we'll have this evening. So his job at Wildhorn is he sources the deals, he underwrites the deals, he builds the business plan, which includes the disposition, the eventual selling of the property. So Hayden will know this property or this data backwards and forward. So Hayden, I want you to be able to introduce yourself, tell a little bit about you, and then we'll jump right into the details of the deal. And at the end, we'll open up and give plenty of time for questions. But Hayden, go ahead, introduce yourself if you don't mind.
Hey, everybody. Hayden here. So I'm a Texas native, originally born in Dallas, and lived here for pretty much my entire life, except for 2 years where I went to business school in the state of North Carolina, but I had to come back as soon as possible. I love living here in Austin. Part of our advantage, I think, is that, we live within an hour and a half of all of our assets. And so, I can see them and our property managers on, a daily basis if I want. Outside of that, expecting my firstborn son in December, and just hoping that this summer heat cuts off here pretty soon.
Great. Well, let's do this. Let's dive in. Here's kind of my plan for the next few minutes. Is we'll do kind of an overview. Most of these details you may already know. We'll talk a little bit about why build to rent. Why aren't we doing that strategy on this particular project? We'll talk about the location, the market, and then do an investment overview, a brief overview. And then I really want you guys to spend time asking questions that you might have. So I'm going to put the deal deck on the screen. And Hayden, why don't you take it away? Let's go over the executive summary here, and let's hit just a few pages in the deal deck that gives us a firm overview of what we're looking at on this deal.
Yeah, absolutely. So this particular asset that we're looking to build will be comprised of 78 duplexes, all of them containing a 3-bed, 2-bath, and an attached 2-car garage. There'll also be a fenced-in backyard. So that comes for a total of 156 units, and they're going to average in size at around 1,500. We really think that this product is in demand for the area, and BTR itself is a unique product where you do not have any neighbors that will live below or above you. So it will give you a little bit more privacy, and at a price point that we believe is competitive versus both an apartment and owning your own home. And this project of ours, we're in partnership with a local home builder called Masonwood, who have executed on this exact product type in a for sale focus on several occasions. And this is our next one where we're venturing into a build for rent type of scenario. We believe tenants in these assets are going to be a little bit stickier. Once you start stuffing things in your garage, it's pretty hard to start moving. So we're really excited to see where we go. And then, Austin, Texas, and Lockhart, for that matter, we think are poised to have some incredible growth here in the near and far future. And so, look forward to seeing this come to fruition.
And you may have seen this in the original deal deck, but I'll give you a little color commentary on it. When Hayden talks about Masonwood, the aligned partner, their original plan for this was to build this out and to sell each of the individual duplexes either one at a time or as a group to investors. So in other words, out of the 76 or 78 units, we could buy a dozen of them and then rent them out. But in combining with Wildhorn, they changed the strategy to a build to rent. In other words, the builder said instead of building them for a profit, in earning their money, selling those units, change the business model to say we're going to build those at a really competitive cost. In other words, we're not going to mark it up to make our money on the sale, but we're going to hold them, and then we're going to do the build to rent. So that's one of the things that makes this whole deal possible, and the math work out is Masonwood is not profiting so much on the build and sell of the house because of the duplexes, because they're holding them for a long period of time instead. Otherwise, I really think that this kind of a project would not be possible. Anything
Yes.
to add?
And I would say that we're not cutting the quality of the build in between a rental property and a for sale one. In fact, because of our history in sourcing materials from overseas in bulk, we can get some really high quality product for cheaper than what you could get at a HD Supply or Home Depot, which is where a majority of our competitors will source their materials.
Good. So guys, be writing down your questions, because I really want to save those to the end so we can look through some of these details instead of asking questions as we go along. But Hayden, let's talk a little bit about build to rent, why that's a compelling strategy in this environment, in this location, and in this particular opportunity.
Yeah, build for rent is a very much a new form of housing asset class, and there's been an incredible amount of institutional interest in it, which is kind of why we are pursuing this development in earnest. At Wildhorn, we've tried to acquire these on a value add basis, and quite frankly found that we could not compete with the capital that was out there. And so, if you can't beat them, build it so you can sell it to them. And it seems like it'll be a really strong strategy. So, other companies that follow this, investment thesis are Invitation Homes, Blackstone has a major one, Apollo, and, large private equity companies are buying up single family for rent homes at a really incredible pace.
Good. All right, let's talk a little bit about the location and the market. I think a handful of the folks here tonight live in Texas, or maybe one or two that are out of Texas. But let's go on down here to take a look at the location. When Mike and I source a deal and work with a partner, the questions we usually ask are, who is the operator? Does that check out? And in this case, Wildhorn more than checks out. Then we always ask about, the second question we ask is going to be about the location, because that matters. And so in this case, Hayden, let's talk about the proximity to Lockhart, what's going on around there, what makes this a compelling area to build in.
Absolutely. So our asset will sit on one of the major east-west thoroughfares through Lockhart, West San Antonio Street. And then its next largest intersection is the 130 toll road. That is the toll road that allows you to skip from San Antonio all the way past Austin. It runs through, the Tesla factory, the Circuit of the Americas, Austin Bergstrom Airport, and a number of other, very important businesses and landmarks in the Central Texas region. It's definitely a new road project, and its use is growing. We use it every day to get to our Eastern Austin assets. And then, Lockhart itself, if you're not aware, is the barbecue capital of Texas. If you have not been, I highly recommend it. There are probably, more than a handful of options, and I have left wishing I got a hotel room to take a nap. Then, there's a ton of interest in growing the commercial portion of Lockhart, and they've invested heavily in trying to attract large national and international businesses to come there and set up shop. One that is of note was Micron. They ended up choosing the state of New York. Chuck Schumer did a lot of work to make sure that he could get something in the city of Syracuse, but Lockhart was number 2 in that one. And because of that, there's a bitter taste in their mouth, and they're ready to come back with the help of the state to help lure in, maybe another Micron or a collection of other companies. And we really believe that there's going to be a ton of growth in that area, let alone, Lockhart itself is a very affordable part of town, and the schooling is great. And, it's a wonderful place to live in between both San Antonio and Austin.
Hey, Hayden, talk a little bit about the water situation there, because that's part of also what drives development and location.
Yeah. So there are a lot of developments going on in Buda and Kyle that are also, communities that are south of Austin, but more on the 35 corridor. It's really hard to find water here these days. The population has exploded, and that's really the limitation to what's going on. Because we have already been moving and have our utilities in place here at our site, we are not limited by the water. Our water has already been solved for, but future development projects are not going to be as fortunate. And, in order to discourage development in Lockhart, they have started instituting, doubling permit pulling fees and things of that nature that, we are not subject to. So, the timing is well and right for, us to, develop versus, someone coming in either tomorrow or, at a later date.
Yep. And if you look at that map, of course, we all, most of us from Texas, we know that I-35 stretches from San Antonio all the way up to Dallas. Austin's the midway point. So 130, the original design on that highway is to take traffic off of I-35, mainly, trucks and what have you. The speed limit's like 85 miles an hour. It's crazy. And that was one of the strategies, is they tried to create a faster thoroughfare. So what we're seeing now is between I-35 and 130, that area is filling in. So most of the growth off that I-35 corridor from Austin to San Antonio is not east. There's not a lot of room for growth of major companies to come in east of I-35. Most of that growth, which again, we've seen from the Tesla factory, we've seen from Circuit of the Americas, most of that future growth is all going west, because there's land there and you have that major highway, which frankly, several years ago when they built it, I thought it was crazy because it swung so far out. But of course, I'm not an urban planner and didn't realize their strategy on that to be able to push growth and development out on that west side. And so all that area between I-35 and 130 is the fill-in area that will benefit Kelley Villas. Let's take a look at some of the slides on the investment overview. Let's see, I think we're going to go back up here to, here you go, 6 and 7. So Hayden, knock yourself out on talking about, the debt, the structures, the returns, and things of that nature.
Yes. So the capital markets are definitely a difficult place to be in today. Fortunately for us, we were able to gather several term sheets from a number of different bank lending partners. All of them were fairly excited about a deal, and we ended up having our loan confirmed by First United. That is going to be a floating rate loan that is 50% loan to cost, and it will have a 50 basis points over prime. If you don't know what prime is, it is the rate decided on by banks to lend to their best and most well-capitalized customers. Through that, there are a number of financing and carrying costs that are included in our model. We have an interest reserve that is in that carry cost. It's about $500,000, which is a little over double the projected interest required over the construction project. So we feel really comfortable about that. Here at Wildhorn, we're not encouraged to go max leverage. We had the opportunity to take on more debt, but we thought that the project itself lent it towards keeping as little leverage as possible, while also making sure that the project was viable from a return standpoint. And, I think we went about it very responsibly and are very excited about it.
Okay, here's a
You
slide
know,
that hits a little bit about the investments and the returns. Can you comment on those?
yes. So the blue bars are showing, cash flows that will come from the operation of the property. Because we're building these homes on an individual basis, it'll take about, 11 months from the construction start date, where we can then start leasing out the first couple of units. Whether in an apartment complex, or a garden style, you can't start leasing until much later because you're unable to get CO until all the units of a particular building are complete. And because those buildings are probably anywhere from 10 to 30, ours is one building is 2 units, and we're able to start cash flowing relatively quickly. The yellow bars are indicative of a refinance and an eventual sale in year 7. The refinance is definitely influencing the IRR here, but we feel very comfortable with our projections on what we can achieve. Once we remove a lot of the development risk, the vertical development risk from the project, we believe at that point getting a 60% LTV loan is very achievable, and we underwrote our project to meet current lending standards at an agency. And we are beating the minimum tests by a pretty significant margin. And we could have asked for more loan dollars, but we thought that 60% was probably a better level than going to 65 or 70. And then the eventual sale, we believe that is based upon a market cap rate of 5%. Today, assets in the market are trading for a sub 5% cap rate, and we're really comfortable where that is at in our model as well.
Okay, so that's a fairly conservative cap rate compared to what's trading right now.
Yeah.
Excellent. And if you'll talk a little bit to the project timeline to give an understanding of timeframes, that'd be helpful.
Yes. So what is important to know is that we are having all horizontal work to be completed as a part of close. Meaning if the horizontal work is not complete, we do not have to purchase the land. And that is a huge benefit to this project and removes a ton of risk. And what I mean by horizontal development, I mean putting in roads, utilities, making sure that there isn't any, chemical issues with prior uses to the site. And then it's also checking the soils to make sure that everything is level and we don't have a lot of foundation issues. Or, also around Austin, there is a salamander that hangs around that is on the endangered species list. If you've never experienced trying to buy some land and then you find out there's a salamander on it and you just have to eat it. So luckily there are no salamanders and we can move forward with the development.
Yeah. My kids go to a school that there's a cave and there's a blind cave spider that lives somewhere underground, and we cannot build over that cave zone. That's Austin.
Yeah.
Yeah.
We're big on our aquifers and our spiders and our salamanders down here in Central Texas.
Waters I get, critters I don't. Oh, don't even get me started. Good.
So, and it's important to emphasize, we already have permits in, or Masonwood already has permits into the city. I think about 40 of them. Half of them are ready to be pulled. So, feasibly, we could close on the asset and then start vertical development the next day. We didn't contemplate that in our model. We gave ourselves a 3-month buffer, but we definitely think that our timeline is very reasonable, and we're really excited to get started on it.
Mm-hmm. And I will add, even though Masonwood is not on the line, there's so many years on this call in particular. They've got, gosh, I think Mr. Gresset started in 1982. He was with part of a group that built the first, large development in Austin, which was Circle C, which is actually a development I lived in for a little while. So Masonwood Homes has got a considerable experience in building homes. They're not new to this at all. In fact, they've got quite a bit of experience.
Yeah, this is not their first rodeo by any means.
No, not by any stretch. And can you talk a little bit about what the macro strategy is? So this is one project, but the goal is to build out a couple of other build to rent communities, correct?
Yes. So Masonwood, our partner, has interests in land throughout the Metroplex. And the idea is that if you build a large enough scale of a portfolio, so maybe 3 or 5 more, you can go in and sell them all at once to a Blackstone for a portfolio premium. We've seen that happen on numerous occasions, and there were just articles, a couple of weeks ago about whole portfolios selling at $350,000 a door, and we don't reach that until well after our 7-year hold period if we were to go off of a cap rate basis. So pretty excited about that.
Yeah, good deal. Okay, well, let's open it up for some questions there. Yeah, who'd like to jump in and start? And I can put that back up if we need to.
And it doesn't have to be about BTR. I can provide restaurant recommendations in Austin if you need them. Also San Antonio.
Well, like you said, when people come to Austin, they ask me where to get barbecue. We send them to Lockhart.
I would think that is a very safe thing to do. There are less lines too.
Yeah. All right. What do you guys need to know to become more comfortable?
Hey, I have a question, Hayden. I know Tremor has shared a little bit about the companies moving in. Is there anything that you guys are looking at in terms of? I know that there are quite a few companies moving into that corridor that are servicing Tesla. What's he saying, or have you heard anything sort of fly on the wall type stuff about more of the development, more companies moving into the area there?
Yeah, I'm not sure how much I can share from being a fly on the wall due to non-disclosure agreements. But what I can say is that we are really tuned into the city. Cooper Drenner, one of our partners, is the head of the real estate council here, and helps draft real estate legislation to be passed both locally and on the state level. So we have a pretty good clue of what's going on in our backyard. And one of the developers that's highlighted in Lockhart, he's one of my friends from high school. And so I know pretty well of what he's planning on doing at Titan Development. So I would say that we're pretty comfortable in the future industrial growth or business growth of the city of Lockhart and of Austin in general. The expansion of the airport will be huge for our asset, along with the growth of Tesla, SpaceX, and the companies that hang on to it.
I have a question.
Yeah.
Who's responsible for all of the property management once the project is built out?
Yes, so we are debating between 2 property management groups. Both would be third parties, but are fairly well respected. I think number 1 on our list is Kairoy. They are an owner-operator based out of San Antonio, Texas. You may see them in the headlines for building large skyscrapers in and around the state. I would say that they are a Class A operator, and having them wanting to come and be a part of our asset is really a compliment to us. I think that they run an incredible process, and they're really well buttoned up. With that, we asked them to underwrite the deal with us, and they gave an opinion on how they thought that the property would operate. So it's kind of been a hand in glove type of situation where we're all aligned on what we're trying to accomplish.
Hey, this is Paul. I have just an odd, I don't actually understand what it means about the water. I mean, can you not get water out not like drill a well someplace out in the country? Is that, I don't understand.
Yeah. So you can drill a well. That doesn't mean necessarily that water is going to be there, but when cities go through future planning, they allocate how much water is going to be used by individual properties. For example, if you were building a retail site or industrial site, those typically use less water than multifamily or single family housing. And they have an understanding of what each household will require in water per year. And they know what the average rainfall is and what their water reserves are. And so they try and limit, too much growth so that, you don't have huge water issues where, you don't have any. And you can operate and have the beauty of the surrounding area at the same time. It's frankly, really, really hard to build single family and multifamily in areas that water has already been allocated to. And so this is one of those instances where I believe we're in a great position because, we have something that, you just can't create. After a certain point, there's no more development. Like there's a trade-off, something else has to be taken offline in order for you to build something more, or we get crazy rainfall here for an extended period of time, but I don't see major climate change happening like that.
Okay,
Yeah.
thank you.
And Paul, I'd say where that works to our advantage is you can't assume that up and down that 130 or I-35 that every city has the water it would require to build things like this. So that's why some cities would say we're not building any assets like this because we don't have the water allocated towards it. So seeing that we have a city that has the water and is willing to expend the resources is kind of a big deal because it creates an exclusivity for which cities are allowing build, projects like this and which cities are not. So water is actually a really big factor in our favor.
Thanks.
You bet. It could theoretically limit competition.
And it does.
Yes. Any other questions? Mike, Hayden, anything you'd like to share that you feel like we didn't cover?
Yeah, I'll just share. I mean, I was just looking at the median house, median house price today is about 480,000, and we're sitting at a 30-year mortgage of like 6.8 to 7.2%. And so, we're just not seeing affordable housing come onto the market here in the greater Austin area. So I get excited about this because it's not only a great investment run by some good partners here that we've done business with before, but it's a solution to this affordability issue that we're struggling with here in Central Texas. So it's kind of it's a sweet deal in that respect. I think it's a real good niche, and I do expect more of these to be coming online. But I like this product. I like the idea behind it. The other thing too, obviously with the debt, everybody's sensitive to debt right now. It's probably a big question we're having. People asking, well, what kind of financing? Because people have heard these, horrible stories of people going out and buying like, $20-30 million multifamily apartment communities with like floating rate debt with no interest rate cap and things like that. But every deal we do, it's typically the market. Is there growth? Are we in the path of growth? Number two, is it the operator? Is this going to be operated with integrity, with professionalism? And it's always about the debt. Do we have smart debt? And have we thought that through? And so I love the plan on this one. The loan to cost at 50% going in is really conservative. And I think as Kirk and I have sourced deals around the country with our partner network, we're finding very few opportunities. But this is one that really meets all those criteria. and it's very conservative. It sort of meets our conservative criteria and underwriting, and in the path of growth. So yeah, I like this. I'm excited to finally. We've been looking and searching. It's exciting to find something that fits. So we have a lot of respect for Andrew. Hayden's doing a great job. So yeah, I'm excited about what this thing can do in the future for this.
Yeah, I
Yeah.
think the last thing I would comment on, just to build on something that Hayden said, and Mike. So the question is, who rents these kinds of places? And Mike's right on. I mean, it's, man, between interest rates and a scarcity of homes. My neighbor 3 houses down just put their house on the market, for example, for $1 million. I do not live in $1 million neighborhood. We bought this house, we bought our house, about 11 years ago for $300,000. So what you're seeing is a scarcity of homes. You're seeing high interest rates that's pushing families and a lot of people out of the housing market. Well, these are folks that may not necessarily want to live in an apartment. So duplex, sharing only one wall, no one above you, no one below you, small yard, 1,500 square feet on average, which is the size of my first home, 1,500 square feet, for a price point that is not that much above a Class A apartment. I mean, we're going for a niche here that I think currently exists. Also, what we're counting on is attracting snowbirds, people who want a place to park their stuff and go and lock it, turn the key and leave it for several months out of the year. And these are the kinds of places that are attractive for that as well.
Yeah. I love to bring up the housing prices. We are building this asset at a cost level that is below the average home price in Lockhart. So even if no one wanted to rent our wonderful property, we would be able to turn around, and we're building it at a spec that you could turn around and sell these assets to retail investors. And then, I'd love to remark upon, who's going to move there. I drive in between Austin and San Antonio on a almost weekly basis. And, when I'm in the car at 8 a.m. driving south on 35, I can't tell you how many cars are backed up all the way from San Marcos. Living in between San Antonio and Austin, it is very much a commuter space. And Lockhart is just one of those cities where people are going to commute into Austin, they'll commute into San Antonio, or they can just go into San Marcos and work at the university, but they don't want to live around a bunch of students. It applies and appeals to a number of different people. And then if you want to go to the rent comps page, this is something I'm personally proud of. I spent a lot of time on it. Why we want to be focused in Central Texas is that we want to be able to drive and see. A lot of our competitors will use third-party data. But this is pulled not from a website, but I've actually visited these properties, spoken with the individuals there, and got comfortable with these live rents. And if you pick estates at Plum Creek, or what is Bridge at Goodnight Ranch, or Avondale at the Colony, those are in Buda, Kyle, and Bastrop, outer suburbs of Austin. Their product that we're looking at there is anywhere from 1 to 4 bedrooms, but their 2-bedroom is 1,000 square feet on average, and their rents are the same as what we've put in our pro forma. And we have 500 square feet more, and we have an attached 2-car garage, and we have a yard. I mean, the difference is compelling. Avondale at the Colony, their 3-bedroom, 2-bath townhome, that one rents for $2,600 a month. So I would say that we have programmed more 3-2-bedrooms in this asset than they do have at Avondale at the Colony, but we're going about our lease up period over a longer period of time, and we feel extremely confident in our ability to fill up our asset at a price at similar assets where you get significantly less in very comparable submarkets. So that's my real selling point and what got me extremely excited about the asset.
So this is Paul again, speaking as an IT nerd and a duplex owner. This duplex was built, but I mean, I knew the guy building it. And so I ran a bunch of network wire in this property. And are you guys going to run, I mean, being a network nerd, are you guys going to run a lot of network wire, including things like camera wiring and outside cameras and alarm systems too?
Yeah, we're looking at wiring the asset definitely for, Ethernet. I don't remember what the exact specification is, but we are also exploring a tech package for ring style doorbells, and electronic locks. As far as individual cameras for the assets, I would say I'd leave that to the tenant to put in. That becomes more of a maintenance nightmare, and doesn't really provide too much for us. If security becomes an issue, you can always put in for a security watch at night. But these streets will be monitored by the city of Lockhart. They are municipal streets. They aren't privately owned.
Okay, cool. Thank you.
All right. Are there any other questions? If not, then we will, this is recorded, so we'll send it back out to you. So count on Mike and I to get back together with you guys over the next couple of days as you have a chance to digest this material. And if there's questions you have in the meantime, we would love to be able to answer them for you. So thank you, Hayden, for joining us this evening and for leading our time. Thank you to the McElraths, the Ivies, Phil. It's good to at least see your name on the screen. And we look forward to talking to you very soon. Thanks again, guys.